Hello, and welcome to another episode of the Market Snapshot series. Good morning, and let's enjoy trading the last day of the month. We are moving into the third trimester of the year. So today we are going to have quite a number of things to discuss. Among them is the key economic data that is coming up in the economic calendar. So on top of that, we'll also be looking at Salesforce earnings. And once we go through this, then we also look at the technical analysis, look at the chart patterns, and try to identify the key market levels and potential market opportunities. So welcome, Richie. Thank you for joining the session. Hi, Kevin. Thank you for joining the session. So let's get this started. So let's jump right into the economic calendar. So first things first, we know that the Fed adopted a data-dependent approach. So the market is reacting to every data point that comes up for the US economy. So over the week, we have had quite a number of data points, starting from the JOLTS job openings on Tuesday, which came in slower than expected. So there is a less number of jobs being advertised in the US economy. And we saw this number drop below 9 million for the first time in a long time. So you can see the level below 9 million at 8.83 was last seen in June last year. So this basically means that there is less jobs being advertised, basically meaning that the labor market conditions are softening. And this is in line with the Fed's expectations. So CB consumer confidence, if you look at the data, you'd also notice that the previous reading was 114, we expected 116, we got 106, meaning that the US consumer is also less confident about the future of the US economy. And this is also consistent with the expectations of the Fed. So moving to Wednesday, we got the ADP non-farm employment change. So the US private sector created 177K jobs in the previous month. And this is way lower than the expectation, and of course, lower than the previous reading of 371K. So this also is consistent with the Fed's expectations, basically implying that the economy is responding to the Fed's policies, and a slowing US economy is acceptable for the Fed. Then we had the preliminary GDP quarter over quarter. In the previous reading, it was 2.4%. We expected the same, but in this case, there was a slowdown to 2.1%, which is also consistent with the Fed's expectations. So we saw pending home sales jumping higher to 0.9%. So this is not consistent with the Fed expectation. In the previous reading, it was 0.4. We expected negative 0.8, but in this case, there was a big jump higher. So goods trade balance also worsened from negative 88.8 billion to negative 91.2. So this was also consistent. And then we had the preliminary wholesale inventories. They were negative 0.5%. The data came in at negative 0.1%. This is quite consistent because we expected an increase, but rather we got a decrease. So today we will be having more data reflecting on the same, and this will be the Fed's favorite inflation measure, which is the core PCE price index month over month, and it will be coming up at 3:30 p.m. So this will be the most important data point for the day, and it will be coming out at the same time as the weekly unemployment claims. So these data points will be very important for US traders, as they will be trying to understand whether the Fed has a higher likelihood of hiking interest rates or holding interest rates level. So from the cocktail of data we've had since Tuesday this week, it's all indicating that the Fed may go for a rate pause. So we'll also be looking at personal income in the US, personal spending, and of course the Chicago PMI. So as we head into Friday, we'll be looking at Chinese Kaizen manufacturing PMI. We'll also be looking at manufacturing PMI for Japan, and also the inflation report for Switzerland before we focus on the Canadian GDP. And of course, the most anticipated data point for the week, which will be the non-farm payrolls on Friday at 3:30 p.m. And as we end the week, we'll also be looking at final manufacturing PMI for Canada and for US, and of course the ISM manufacturing PMI, as well as manufacturing prices. So with that in mind, we know that today is a largely quiet day until we get into the evening. So we've had preliminary industrial production for Japan coming in weaker than expected. Retail sales for Japan jumped higher to 6.8%. ANZ business confidence in New Zealand improved to negative 3.7 from negative 13.1 the previous reading. Private capital expenditure in Australia improved by 2.8%, which was lower than the previous month. So it was better than expectation. Private sector credit at 0.3%, consistent with expectation and the previous reading. Then manufacturing PMI slightly improved in China to 49.7 compared to the expectation of 49.1 and the previous reading of 49.3. So services sector up 51.0. This is a slowdown from the previous reading of 51.5, but still within the expansionary territory. So housing starts for Japan slumped lower to negative 6.7% compared to the previous reading of negative 4.8%, showing that Japan's housing is cooling down. So German retail sales down negative 0.8%. This is basically indicating a weaker German consumer. Retail sales for Switzerland also down negative 2.2, weaker Swiss consumer. French consumer spending consistent with expectations at 0.3, but also lower than the previous reading. All these data is indicating a weakening global consumer. Preliminary CPI for France, 1.0%. This is quite a big jump. It basically means that inflation is jumping higher from a previous reading of 0.1 to 1.0%. Basically screams inflation coming back to the European regions. And this is a data point for France. So we'll be expecting this data point to have an impact on the overall Eurozone inflation. So as we head forward with the economic calendar, we will be expecting the official CPI flash estimate for the Eurozone coming up at midday. That is at 12 p.m. So in the previous reading, inflation for the Eurozone was 5.3%. We are expecting this to slow down to 5.1%. But then from what we are seeing with the French CPI, there's a high likelihood that we could be seeing this inflation jumping higher. So we'll also be looking at the unemployment rate in the Eurozone before we look at the ECB monetary policy meeting accounts, or basically the meeting minutes at 2:30 p.m. And this has the potential to also cause some volatility on the euro pairs. So most important data point for the day, the core PCE price index, and of course the unemployment claims from the US. So knowing that, we also know that the CME Fed funds futures have been pricing in a high likelihood of the Fed holding rates steady and a smaller likelihood of the Fed hiking interest rates. So as early as Monday, early this week, this likelihood was at 21.5%. And now you can see it's all the way down at 11.5% after the number of data points we have witnessed over the week since Tuesday. So this basically implies that the probability of a rate hike is getting smaller and smaller, and the probability of holding interest rate level is rising by every data point. So if today we have more data point supporting a slowing US economy, then this probability could even rise higher. And as it rises higher, then it has some implications in the markets. So some of the implications would basically mean the dollar index continuing to lose. So as you can see over the week, since Monday, Tuesday, and Wednesday, dollar index was pretty weak. But today you can see the resurgence of the dollar. It opened the market quite strongly and has been heading higher as we get into the London session. So a strong dollar has several implications. So on one side, we are seeing some form of reversal happening with pound USD. So while it was pretty bullish for the first 3 days of the week, today we are seeing some form of pullback happening here. But then the overall indicators are showing that there's a high probability that the market will continue moving higher. So there is a good chance that the pound will continue being bullish this week. So in this case, when we see this kind of pullback, it makes sense to look for some form of bullish entry. So the market is still trading within a flag on a lower time frame. This is the 50 minutes chart. So if you look at this, you notice that it's not more of a direct reversal. It's more of a consolidation since yesterday in the afternoon. So what we are seeing here is a market that is trading along this particular flag. So in this case, we should be waiting to see some form of breakout. If it happens to the upper side, the better. But then if it happens to the lower side, then we might consider going for short selling positions. So as for USD JPY, it's a similar thing. You can see the consolidation and the swings happening here. So on one side, the US has been losing to the Japanese yen. It seems quite consistent. So if you go to a smaller time frame, in this case, the 15 minutes chart, then you can see that there is some form of trend line shaping up here. And the market has just bounced off the upper trend line. So there's a likelihood we could be seeing some further downside momentum in USD JPY. So in this case, it would basically imply the dollar continuing to lose to the Japanese yen. So for Euro USD, the pullback seems to be stronger. The Euro is strongly pushing back downwards against the dollar. So after the strong rally earlier in the week, we are seeing the market moving back towards this area. So I'm still very bullish on this one. So after the pullback, I should be looking for a potential market entry towards the upper side. So for USD CAD, we are seeing the same thing. The double top formation here, and then the dollar continues losing to the Canadian dollar, retests the area, and then continues moving back downwards, and then some form of recovery, but we have not yet hit the target. So the target seems to be this low and this set of lows around this area. So there's a good likelihood that the market could continue pushing down further to around 1.34959. So as for gold, we saw some strong bullish momentum happening here. So if I zoom out, you'll notice the strong acceleration since we got to this bottom of around 1884. And all we have been seeing here is bullish days, same for this one. So at 1945, there's still a strong likelihood that gold continues to rally. So as we get this V-shaped formation, there's still a good chance that once we break this level, we'll get to the 1954 target, which was the target all along since we got to this bottom. So yesterday, we saw the market trading sideways for a while before breaking higher. So if you track these on a smaller time frame, then you'd notice what was happening here. So market basically consolidating here. So you can see the consolidation and then a clean break towards the upper side and the market headed higher. So now, since the high that we saw yesterday, it seems like the market is also consolidating again. So all you have to do is to monitor the consolidation and wait for some form of break. So here the market is just moving sideways. You can choose to use a rectangle or basically a trend line. And then you monitor when the momentum comes in the market so that you can identify the direction of the break and benefit from the momentum afterwards. So for now, this is what we are seeing in gold. Nothing much, just some sideways momentum, but eventually we will be expecting to see a strong directional break, which will give us the direction of momentum. So when the break happens to the upper side, go for long bullish positions. If it's to the lower side, then short selling positions. So for Audi USD, remember this is a waiting game. So the Audi USD has been having some form of correlation with gold, but it seems like it was broken yesterday. So there was a strong rally followed by a pullback, a strong rally this morning followed by a pullback, which basically screams a market that is basically consolidating. So if you are thinking of the consolidation here, I'll be thinking in lines of the market following this path here. So this is the 15 minutes chart, basically mapping yesterday's highs and lows, as well as today's highs and lows. So this is what we are seeing here. So eventually the market will break out of this, and the breakout will give us a direction. So strong bullish momentum on US equities as a result of the potential of the Fed holding interest rates level. So higher interest rates have been quite negative for equities. So whenever we see the potential for a pause and an eventual pivot, then that would be pretty bullish for equities. So seeing the data points we have seen since Tuesday, You can see there was a big jump on Tuesday, and then on Wednesday even higher. And now the market is attempting to break higher for the Nasdaq. So this is a very nice consolidation. And whenever you see something like this in the market, it basically screams opportunity, because eventually when the market breaks, sometimes you'll see a strong directional movement, which you can easily capitalize on as a trader. So in this case, if you happen to see a break higher, then go for a bullish position and enjoy the new momentum after the market gets off that consolidation. So it's the same thing for the Dow Jones. So we are seeing a market that was moving sideways, and now it seems like we have a break. So the market is showing some strong directional movement after basically consolidating since midnight to this morning. So as we get into the London session, you can see the acceleration here, but of course you have to be worried about yesterday's high, because the market seems to be testing this area. So a break above this would mean that the market keeps going higher. So as for the S&P 500, it's the same story. So market was moving inside the triangle. So if we try to monitor this is how it looks like. So potentially we could be seeing a break towards the upper side, which would mean an opportunity to trade higher on the SP 500. Then for oil, you can see the acceleration after the sideways momentum earlier in the week. So there was this sideways momentum, and you are monitoring the break. I remember showing you this. So the market broke towards the upper side towards the end of the day on Tuesday. Kept going down higher on Wednesday, pulled back yesterday. Then there was some more news of Russia cutting oil output, and this pumped the markets back higher. And now you can see as we get into the London session, we are retesting yesterday's high, and potentially we could be seeing the price breaking higher. So remember, this was a major resistance level for Brent oil prices. So this is the area that worked as resistance the last time. So now the market tests this area, fails to break, pulls back downwards. Then you can see the long lower tails indicating rejection of lower prices, and then the market pulls back up. So it's also a retest of this area here. So if you observe keenly, you notice that this area was a major resistance. So the market goes back, retests the area, and then bounces higher. So in this case, a break above 85.481 would mean we get some good potential for prices accelerating higher. So European equity indices made some good rally, followed by a drop yesterday, and then some form of recovery. And then from the price action that we've had in the last 1 hour, it's basically indicative of rejection of lower prices. So we could be seeing these equity indices retest at the previous high. And this is for the French 40 index. So for the Euro 50 index, it's the same candlestick. So you can see the strength of the correlation between these indices. So market rejects lower prices, potentially pushing higher and retesting yesterday's high. And it's the same thing for the UK 100. So you can see the last candlestick has a long lower tail. So for the UK 100, it seems like there is some form of consolidation. So you might want to consider this as a healthy trend line to observe. And on the lower side, there's one. So in this case, monitoring the breakout would present a nice trading opportunity. So as for Bitcoin, we know there was a big jump on Tuesday, some form of pullback on Wednesday, and now it seems like the volatility is almost dead. So in this case, you just be monitoring what's happening here. And from what I'm seeing, it's just sideways momentum, which would potentially present an opportunity if the market happens to break with a strong directional momentum. So if there's a strong directional momentum higher, you go higher. If it's lower, then you go lower. So that's it for the charts. And now we look at CRM. CRM is the ticker symbol for Salesforce. Salesforce is the most widely used, I would say, content management system or customer relationship management system. So whenever you have a company and you have a large number of clients, a majority of the companies will use the CRM software to be able to handle the different queries with their clients. And since introducing AI into their products, including AI chatbots that can be able to respond to their customers, the company has had quite a crazy valuation. So from the data that you can see here, the company reported earnings yesterday and immediately jumped 5.28% in aftermarket trading. So the market closed at $215.04 per share. It was up 1.45% yesterday. But then after the announcement of earnings, which was after the market close, the stock jumped to 226.40, which is 5.28%. So the opening price today will be much higher than the closing price yesterday. So if you look at the key details, the previous close was 211.96. So strong directional momentum since the previous session. So the daily range for the stock yesterday, 209 to 215, and it closed at 215. So it closed on the upper side of the range. For the year, the lowest we have seen is 126.34, and the highest we have seen is 238. So we are somewhere in between 126, below, somewhere in between 126 and 238, but closer to 238. Market cap is $209.45 billion. The average volume is 4.47 million shares. And the price to earnings ratio is at a crazy valuation. It's at 566.25. So when you see a stock with a very strong price to earnings ratio, in this case 566.25, basically means that you'd have to invest $566.25 in the previous 1 year to earn $1 from that stock. So a very high PE ratio implies either of two things. One, either there's a bubble and a strong speculation in that stock, or there's a very strong belief in the future earnings of this company. So I'm betting on a strong belief on the future earnings of this company. That's why we are seeing the strong directional momentum in this stock. So here today, the company is up 59.55%, and this could be moving even higher later today once the market opens. And of course, if you look at the earnings report yesterday, the company basically announced earnings of 8.25 billion, which was up 11.28% compared to the same period last year. And of course, the earnings per share, 1.69, which was up 72.45%. So more on this, you may consider checking out the company on your own free time, see how it performed, and hopefully you'll be able to take advantage of the momentum that comes up later in the day once the New York session begins. So that's it for the day. I'll be checking if you guys have any questions. I'm seeing out of commentary here, analysis on US oil, gold, and UT 100. That has already been done. Hi, super analyst. No, I'm not a super analyst. I'm just an average analyst in the market. There are way bigger and better analysts in the markets than myself. Hi, JSCode. I can see Kazadi, JT Agencies, Susan, Philip, and Kevin. Good morning. Agreed with you on Fed pause. I feel the same rate pause for ECB, Bank of England, seeing weekly data coming from Eurozone and the UK. The lagging effects on rates appears to be having effect on central banks' desired movement of the economies. So we are seeing a lot of data showing a slowing US economy. So this basically implies that there's a high likelihood that we'll be seeing the Fed pausing rates. Say we receive the report that inflation in country X in Europe, inflation is rising. On the other hand, countries G's retail prices are dropping. Clearly, the reports are not moving in tandem. How do you trade the EU? So we look at the leading countries. So when you're measuring inflation in the Eurozone, there's about 20 countries in the Eurozone. And there's small economies and bigger economies. So bigger economies will have a much higher weight compared to smaller economies. So for instance, if you're trying to understand manufacturing in the Eurozone, you focus on Germany. If Germany's manufacturing is doing well, since it has a much higher weight than the smaller economies, then it will have a big impact. So if all things are gloomy in Germany, then it will most probably be gloomy for the entire Eurozone. So we use them as leading indicators. So that's why a focus on France will have an impact on the Eurozone. It's the second biggest economy in the Eurozone. So in that case, we use that country as a leading indicator. So the fact that we saw inflation on the economic calendar, in this case, it was just a moment. So in this case, you are looking at, yes, it was a French preliminary CPI. So consumer price index jumping higher in France has a much higher weight compared to when it happened to a smaller economy like Lithuania, Poland, and so on. So in this case, we expect that it will have some upward pressure on the overall number in the Eurozone. So in this case, I expect that the inflation will be on the rise for the entire Eurozone. Sometimes bad news is good news. With the disappointing US data reports on labor force and manufacturing activity being sluggish, how does it benefit the other alternative asset classes? EU, the euro, gold, don't know what STK is. I'm assuming EU is the euro, GLD is gold. So in this case, we are looking at bad news being good news. And this basically implies that we are basically trying to front run the Fed. So if the Fed is looking to slow down the economy, we don't fight the Fed, we follow the direction. So if the economy, if they decided that they are being data dependent, then we follow the data. And if the data is indicating a slowing economy, then we expect that the Fed will pause interest rates. And as a result of that, it will have an impact on the dollar, which is basically weakening the dollar. So if the dollar is weakening, then other assets will be strengthening against the dollar. So now we know the effect would be, let's say, the euro gaining against the dollar, gold gaining against the dollar, and so on. So I know you don't look on yen futures, but it's on a critical zone of support. The pair has been in downtrend for long. It might do a pullback. Yes, if the dollar is weakening, then there's a good chance that the Japanese yen will be one of the candidates to make a pullback against the yen. Against the dollar. So with a much weaker Japanese yen, there's a high likelihood it will be taking advantage of the USD weakness. How do you think about the BRICS and their overall effect on commodities? After how long do you think they will break the dollar's dominance in the global financial markets? I think this is a generational fight. It's not something that is going to happen today or tomorrow. The BRICS currencies will not overpower the dollar. The dollar is currently too, I would say, ingrained in the financial system. So what we might experience with the BRICS economies is breaking down the petrodollar. That would at least significantly reduce the dependence on the dollar and offer a lot of countries some options, especially the ones that are facing sanctions and difficulty getting the dollar. So financing, if let's say an economy like Kenya is facing difficulty getting financing from, let's say, the West, then we might turn to the East to get more financing for our projects. And that financing will not be in terms of dollars. This basically reduces dollar demand. So the dollar might lose some market share to the BRICS currencies, but then it will still be the world reserve currency. So while the demand might be slow, we'll be seeing the BRICS currencies gain a bigger market share of the world reserve currency status. Can you make a prediction for NFP given the divergence? All the non-farm payrolls this year have been revised downwards. So that tells you a lot. The job market is softening. There's a high likelihood that the NFP will miss, and that would probably weaken the dollar further. So I don't know about that. So that's why we wait for the announcement. So it's a bad play to try and predict the news, because you can be wrong and it can have some bad impact on your account. But of course, there's a high likelihood that the NFP will miss. Physical crashes. Yes, we have physical crashes on all our satellite offices. If you are in around Nairobi, you can join our physical classes in Kitengela. We have Eastleigh, and also we have Thika and Westlands. And on top of that, if you're around the Rift Valley, we have physical classes in Nakuru as well as Eldoret. And if you happen to be in Kampala, we also have physical classes there. So August 2023 gone was a month punctuated by extreme volatility and uncertainty. It was bit hot in for trend followers, coupled with stock and bond prices for at the same time. Hope September will be different. So this week has had the lowest volume in the year. If you compare all the weeks we have had since the beginning of the year, this was the most low volume week. Bank of Japan to conduct fixed rate purchase operations for cheapest to deliver 10-year JGBs from September 1st, 20th. Yes, this is a process that has been continuing weekly, and it has become kind of priced in the markets. So we expect that the JPY overall will continue being weak. But then the key focus today is on the dollar weakness, where a lot of assets that have been losing to the dollar are beginning to recover. So while this has already been priced in, the weakness of the dollar has not been priced in yet. So in this case, I see a potential likelihood that the Japanese yen will be doing the exact opposite. Rather than continuing to weaken, it will probably start gaining some ground against the dollar. So any advice on Euro USD? We have already covered that. You comment about Eurozone. Does ECB only work on huge economies in the zone? If inflation is high in Germany, but low in Poland, ECB will hike rates and then disadvantage the small economies. That has been kind of a headache for the entire Eurozone. It's more or less like the ECB has higher representation that is serving the bigger economies. So of course, whoever is funding you basically calls the tune. So in this case, if Germany is funding a majority of the Eurozone activities, then it basically means that they call the tune. So most of the policies passed by the ECB will be serving Germany first before the smaller economies. Platinum and palladium, honestly, I haven't checked that. If I said I had an opinion, I would be wrong. So thank you very much, guys. Our time is up. I hope to see you on the next one. So last one, USD CNY. We know that the Chinese economy is slowing down. So China is moving into ultra easy monetary policy. So I expect the dollar to continue strengthening against the Chinese yuan. However, from what we are seeing this week, it's basically showing some weakness in the dollar. So you might have to wait a little bit, a couple of days from now. And once everything cools off, then consider buying the dollar against the Chinese yuan. So for now, I don't think it's the right movement to start thinking about the USD CNH.